What's up, crypto community? In this video, I just want to cover another article with you all. So this is directly off of Ripple's website. So let's go through this here together. Q3 2018 XRP markets report. I'm going to read this and then I'm going to just kind of provide my thoughts on it as we go along here. Ripple sells $163 million in XRP amidst rising volatility and volume in Q3 2018. Ripple sales accounted for 0.43% of global XRP volume. 3 billion XRP released out of cryptographic escrow. 2.6 billion XRP returned to escrow. Wall Street firms take early steps toward providing institutional custody of digital assets. So this is something that I think is going to happen. It's pretty much inevitable at this point, is that cryptocurrencies are going to get kind of recognized as their own asset class. I mean, we see exchanges popping up all over the world. We see Wall Street getting involved with digital assets. I think all of this stuff is going to become interconnected in a way we really couldn't have even imagined. But all I know is digital assets are here to stay. Anyone who's telling you that cryptocurrencies are just some bubble and that this technology is just going to be gone in a few years or in a month or something, I think is just completely wrong, because there's just so much growth and maturation going on in this industry, and that there's just a lot of potential for money to be made. And the reason being is because digital assets, particularly XRP, make it very easy and very fast to move value around, and that's something that's very revolutionary. That's something awesome. It makes it much easier for us to exchange value amongst each other without having to go through some type of middleman or anything like that. But let's continue here. So it shows the sales summary here, which I'm not going to delve into too much, but let's continue reading. Ripple's XRP sales in Q3 2018. Ripple sold $65.27 million worth of XRP programmatically. This represented 0.172% or 17.2 basis points of the total XRP volume traded globally in the third quarter. In addition, XRP2 LLC, a Ripple subsidiary that is a registered and licensed money service business, sold $98.06 million worth of XRP in institutional direct sales. In total, the company sold $163.33 million worth of XRP in Q3. So you can see the sales of this stuff are increasing, and it's only going to continue to increase, especially when we see the next bull run. I think there's bound to be another bull run. And when it comes, there's going to be a lot of new investors that jump into this. And there's this right now, even like the total market cap is only $215 billion. This is nothing considering how many institutions and banks and just so many companies and stuff are gearing up to enter into this market space. And when they do, this market cap is going to go well into the trillions. So there's just a really small pool of money in here right now. So I think there's just so much room for growth, maturation, and that of course also means making profits. But let's continue here. Where was I? XRP volatility was light throughout most of the quarter, then jumped in the last 2 weeks of the quarter as the price also increased. And volatility right now can also be, tied back into the market cap. The market cap is small, so if someone dumps a lot of money into the market, it's going to cause, the assets to be volatile and to fluctuate. But over time, as more money is a bigger, market pool, bigger money pool in the market, then it won't be able to fluctuate as much. So yeah. Let's continue going down here. Q3 escrow activity. In Q4 2017, Ripple locked up 55 billion XRP in a cryptographically secured escrow account. Ripple created the lockup to create certainty of XRP supply at any given time. Due to that lockup, Ripple has access to only 13% of the total XRP in circulation. Ripple sales were a tiny fraction of that amount. In Q3 2018, 3 billion XRP was again released out of escrow, 1 billion each month. 2.6 billion XRP was subsequently put into new escrow contracts. The remaining 400 million XRP not returned to escrow is being used in a variety of ways to help support the XRP ecosystem. The reason for these escrow accounts is to prevent the holders to be able to just dump these large amounts of XRP into the market. So this prevents being able to either crash the price or drive it up when they want to. They won't be able to do that because that XRP is locked in escrow. So that's what it serves for. And also XRP has a burn rate, meaning that every year, every month or something, I'm not entirely sure, a certain amount of XRP is completely wiped out, and this in turn is going to help over time. It's going to help sustain the value and then also bring it up. Market commentary. The total market capitalization of digital assets fell again in the third quarter, declining 12%. Most of the major assets, including XRP, traded in a continued tight correlation through XRP, though XRP price rallied at quarter end. Back in December, there was a huge bull run in cryptocurrencies. So to me, this year, it made sense for this year to be, bearish and to be in the red and to see this decrease in, the value of the digital assets. But it's not to say that cryptocurrencies aren't going to see another bull run. I definitely think it's going to happen, and I think it's going to be far greater than the previous one. I think it's just waiting to happen, because the amount of money that still has to enter into the space is going to come, and when that comes, we're going to see another bull run and money being made. Industry activity continued its growth with a myriad of announcements. E.g., Coil began testing its web monetization product with more than 200 websites enabling XRP payments, although three trends stood out in Q3. ICOs and regulation. Q3 saw a pullback in initial coin offering issuances on the heels of a report by ICO Rating that said 55% of initial coin offerings failed to complete their crowdfundings in the second quarter. In addition, U.S. regulators took a number of actions throughout the quarter in an effort to support healthy markets. ICO promoters were a particular target. On September 11th, the SEC filed its first case arguing that an unregistered broker-dealer sold digital tokens, while Jolla, California-based crypto asset management, raised $3.6 million from 44 investors in 15 states last year and had $37 million under management by year. The firm was censored and agreed to pay a $200,000 penalty. In its first cryptocurrency action, FINRA charged a Massachusetts man. Okay, so I'm not going to really read this here. Okay, this part I do want to cover. The Securities and Exchange Commission rejected a Bitcoin ETF application by Cameron and Tyler Winklevoss. If you don't know these two guys, they proposed this ETF. It got rejected. However, what I think is going to happen is that there's going to be more ETFs being proposed, and that eventually these things are going to become adopted. Right now, it's so early on for blockchain and cryptocurrencies. But what we're kind of seeing right now is the railroad tracks being placed, and once the railroad tracks and the foundation is built, then we're going to really see huge gains in values, particularly for those assets that have real world utility and they're fast and efficient, and XRP is exactly that. So where was I? A substantial majority of Bitcoin trading occurs on unregulated venues overseas that are relatively new and that generally appear to trade only digital assets. The SEC said in a lengthy filing. Further, the SEC found that Bitcoin is not demonstrably resistant to manipulation. In a closely watched decision in September, a federal judge in Boston ruled that the Commodity Futures Trading Commission sufficiently alleged that a virtual currency named MyBitcoin met the definition of a commodity and fell under the CFTC's purview. Geographic trends. In the final days of the quarter, South Korean exchanges emerged as some of leading trading venues for digital assets. Also of note is the country of Malta. For more than 2/3 of the quarter, overall global digital asset trading was led by exchanges based in Malta. So you can see there's exchanges across the world, in the United States, in Canada, in Asia, all over the world. Cryptocurrency exchanges are popping up. This is a sign that digital assets aren't going anywhere. They're only going to continue to grow. Where we're seeing the birth of an entirely new asset class. This is why I think there's a lot of potential here for retail investors like me and probably you watching as well. That there's a lot of opportunity to make life-changing profits here. If I think in my opinion, the best strategy is to hold long term. But yeah, over the last 6 months, Malta has proposed a number of rules that create a clear legal framework for the trading of digital assets. Additionally, Malta lets international companies pay as little as 5% in corporate taxes. Prime Minister Dr. Joseph Muscat has called cryptocurrencies the inevitable future of money. And yeah, when you take a look at history, I think when you step back and you take a look at history and you see all the revolutions we've had, we haven't seen that revolution in the monetary and financial sector, and now we're seeing that with blockchain and cryptocurrencies. If information can flow instantaneously and so fast, then value should also be able to do so as well. And this is just that. This is the blockchain and cryptocurrencies are the stepping stone for that to take place. That's why I see this again as a huge opportunity. This has led to a number of large crypto firms, including Binance and OKEX Technology, moving their operations to the Mediterranean island nation. So we can see again growth all over the world in in Asia, it's in Russia, anywhere you name it, cryptocurrencies, these things are popping up. It's all happening. And Wall Street adoption. Big institutional firms continue moving towards backing crypto trading, but have yet to launch offerings into the market. Again, this is why I see huge potential. This is all going to happen, yet it hasn't happened. There's just, once it happens, so much profits are going to be made. This is absolutely insane. In August, Bloomberg News reported that Goldman Sachs Group was considering a plan to offer custody for crypto funds, citing people with knowledge of the matter. In the second quarter, Nomura Holdings announced a custody consortium called Komenu and Bank of New York Mellon, JP Morgan Chase, and Northern Trust are all reportedly exploring or already working on crypto custody services. Announcements of this sort continued in Q3, but the efforts have yet to yield widespread institutional trading. This has allowed emerging companies to build a handful of large businesses trading digital assets. Traditional Wall Street firms are waiting in the wings. Last quarter's Q2 22 can be found here. So yeah, absolutely great information here. Wall Street gearing up to jump into cryptocurrencies. The entire world is gearing up to jump into cryptocurrencies. This is all waiting to happen. Like I said, the foundation is being laid, the foundation is being built, and once it is, then so much money is going to flow into this market, in turn driving up the value of these assets. And I think, in my opinion, my humble opinion, I think XRP is going to really lead the way. Why? Because it has that use case. It has countless partnerships, and it also has a great team behind the project. So these and also it's working with institutions, it's working with banks. So these are all, in my head, green light for what's coming for XRP. I think right now cryptocurrencies and blockchain technology is just it's literally being the groundwork is being laid, and once it's laid, we're going to see huge profits in the future. I hope you all enjoyed this video, and I'll catch you in the next one.